Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, November 3rd, 2021. What I'm going to do in this video is a brief update on the equity markets, followed by updates on, in this order as well, updates on crude oil, natural gas, Treasury bonds. Not so much as an update, haven't covered it in a little while, but more of a new potential trade idea on lumber futures. Then we'll look at do updates on gold, silver, and the euro, especially now that the Fed has come out with their commentary, and I'll get to that in a second when I get to Treasury bonds. All right, so we're looking at a 60-minute chart of QQQ. Nice, clean, rising wedge. This wedge, there are no guarantees in trading, but this is about, this thing looks ready to pop any minute now. You have targets laid out here about 382.64, 378.44. T3 zone runs in around 374 or so, T3 zone that is, and then T4 about 369.50. So those are the current initial targets. You know, looks something like this is what we'll usually get if we get this correction. And again, there are no guarantees, but this wedge, wedges typically break around, give or take, but around 70% towards the apex of the wedge. In this one, you're getting close there. You're really pinching and getting there now. So wedges, this wedge will probably break down past that point. We're really in that sweet spot. So again, no guarantees, but what I can tell you is we have a nice clean trend line below with a lot of distinct reactions going back here to early mid-October reactions along the way, and we're dancing on that wedge now. So that's that. So again, breakdown appears to be likely and imminent, but unless we get it, the near-term trend remains higher right there, and you need to get that solid break, especially a 60-minute close below it. So go ahead, set your trend line alerts if you're interested in that one, and we'll look at the futures real quick. Nasdaq 100 futures, and let me try to zoom back out here 2 months. Here, I can do it this way. We'll go back a little bit, and well, there it is. This stretch, that was our last divergent high. Gave us this correction that ended with this divergent low, gave us this rally that will most likely end soon with this divergent high. Let me tighten it back up here and show you. This is again NQ Nasdaq 100 futures. You had that one brief and slight whipsaw, not even impulsive, and that was after the Apple and Amazon earnings right there. Gave you that whipsaw. Other than that, just like QQQ, it is a very clean trend line going back into around October 12th or so. A lot of reactions along the way, including recently, and we continue to compress within that wedge, getting tighter and tighter with the divergences still very much intact and only steepening recently. So again, breakdown appears likely. First target here. You can correlate with the that chart I gave you of QQQ, but roughly about 15,716, 15,536, and then you have this larger, more significant trend line, and that's a likely target as well for you there. And that is NQ Nasdaq 100, sell signal pending a solid break, especially a solid 60-minute close below the uptrend line. Next up, crude oil. This is that 120-minute chart I got out to you this morning right after the breakdown. Not much else to add to it. Negative divergence, building. We had a primary trend line here with numerous reactions going back to about mid-August, and finally have triggered a sell signal on a break, and an impulsive break at that. And so far we've stopped, bounce exactly where I figured we would at that first support at 80.75. You really have to zoom in to see the bounce. It wasn't much. It's more of a, I define a reaction. I should clarify. The initial tag of each of these price targets that I list on the way down is likely to produce a reaction. And my definition of reaction is either when you're headed down, that is either a bounce and or consolidation on that level. And pretty much that's it. We hit it earlier this morning, and after I got the post out after the breakdown, impulsive drop to it. 1, 2, this is the third 60-minute candle consolidating on that level. And so far the buyers are really not stepping in at all. It's just more of a halt, temporary pause of the selling. And so I very much maintain the breakout or the breakdown is about as good as it gets. It doesn't guarantee anything. The way this works in my book is that it is a confirmed breakdown. It's impulsive, solid, several 60-minute closes below, everything you want to see as expected. A reaction so far on the first target, and the fact that the buyers didn't step in so far, well, let's not read too much into it. It's, this breakdown just occurred a few hours ago. Let's see where it goes. But, I think the next subjective add-on or new short entry will be on a break below, solid break below at 80.75, take us down to 78.90. Get another reaction there, and maybe a kickback, especially if we don't get a snapback now to back test the wedge or anything. And then we'll probably, if we burn on down through here, be pretty near-term oversold. And what I like about this, if that happens anytime soon, see, we have potential divergence right now, but I suspect that's going to be foiled soon. And again, so this is the an intermediate term, near-term target. There's certainly the potential for a lot more. Let's just focus on that target right now. And let me just go back a little farther in time here for you. Here we go. Jumped over to 2-hour chart. This is a big level. This is where I think we're going at minimum following today's breakdown. So again, whether we kick back or not, it doesn't matter. We break 80.75. That's the next sell signal. 70.90, probably a little stop there, and then ultimately 75.72. Pretty big level where I would expect a reaction if and when we get there. But of course, it depends on how the charts look at the time. Nat gas, really not much to update there. Remember yesterday we came down and hit this, we hit dual support, both the neckline of the head and shoulders pattern, which is now finalized, as well as the primary uptrend line here, and bouncing so far. That's it, not much more to add. There's your potential confirmed head and shoulders pattern, but we still need a breakdown. And so that's what I'm looking for, a sell signal on a break below these intersecting trend lines, the neckline and the primary uptrend line. You do have a decent support below at 4.992, so it would certainly help to see that get taken out, and then move on down to my targets there, about 4.35 and $4 on NG. And you can trade if you trade futures. I'm sorry, if you don't trade futures, you like ETNs and ETFs. UNG is been around forever, pretty much the most liquid ETF or ETN technically out there for nat gas. And you also have, what is it, KOLD, KOLD, as a 2x short, I believe that is. So those are your proxies, and you can just buy that because it goes short. You do have the leverage, and over time, if it's, if you're in a unidirectional trend, meaning we drop pretty hard, KOLD should outperform, actually do better than 2 times the drop in natural gas. However, it's these choppy moves that the decay works against you on leverage ETFs, especially in a volatile instrument. And in that case, you would have been better off shorting UNG. Where it goes from here, which one, I don't know. It depends. Some people don't even have the ability to short, and so if they want to go short a commodity, they have to buy the inverse ETN if they have one. So just one consideration for you there. Next up, Treasuries. So recently become bullish on the 5-year Treasury, but I even mentioned a bearish setup on the 30-year. So I mentioned you could do a pairs trade where you short the long bond, the 30-year, and you go long the 5-year. Helps to, it's a little bit of a capital burner depending on the amount you have in your account, but it, will somewhat hedge you. Rates tend to move together, but again, we're on different ends of the yield curve here. And so what happened, the Fed came out today, they had their meeting, and they said they're dialing back their bond purchases. And I'm reading just the headline here. It says the Federal Reserve approved plans to begin scaling back its bond buying stimulus program this month and end it by June, a major step towards withdrawing its aggressive pandemic-driven economic support amid recent inflation surge. So I didn't hear the minutes of the meeting yet, but obviously Powell, if they're saying that, he's finally cowing down and acknowledging inflation is a real threat to the economy. And therefore he's going to Fed's going to be ending the bond purchase program, and eventually we'll see. I don't know if they commented on rates, but I'm sure that dot plot which is the expected hike in, the federal funds rate. I have to imagine that's been moving up recently with inflation continuing to rip through the financial markets. And then here is that nice little bearish rising wedge pattern on ZB. ZB is the 30-year bond. You're looking at a hourly candlesticks here. And this is when they came out with the announcement. So we broke down. There's a sell signal right there. We had a little bit of a kickback rally, but that took the 30-year down below this wedge pattern. And you can see support level here, first target about 159.240. Hard to say. Again, I'm more. This is one trade idea. You can take it as an outright short. I'm not crazy about it, but it is worth mentioning. And you do have these nice clean divergences, just like we had nice clean bullish divergences at that low. I threw it out here as a long trade idea there, and again here, and both those played out. So it's more of a hit and run kind of short-term swing trading thing. Get in, get out, and move on to the next one. But I don't see a trend trade play right now. And yeah, don't get me wrong, I still remain longer term bearish on bonds, but you don't want to get stuck in one of these sideways ranges, especially with futures. You have to roll them and all that. And if you're using ETFs like TLT or IEF, well, you got to use a lot of it to make a decent return, because bonds don't move a lot in percentage terms. And this is, we could just see these moves lately. Trading bonds, it's much more conducive to active trading, active swing trading. Trends lasting just days, maybe a few weeks at most, a couple weeks, and then get in, get out. So hopefully that makes sense for you. And next up, ZF. Remember, that's the long bond right there, the 30-year. ZF is the 5-year bond, and that one, like I said, coming close. I can still see the possibility, and I'm updating this one almost daily recently, that we can come on, make a slightly marginal new low, and still keep that divergence in place. Remember, on the 5-year yield that I've showed you quite a bit recently, there's major resistance that we fell reversed just shy of, and again, these are bond prices. So if we run up to the resistance in yields, it's going to make for a marginal new low in the 5-year bond price. But we came close enough, and sometimes you get close enough and that's it. So as of now, we have, what I can tell you with certainty is we've put in divergent low. We put it in here. We tested it again there. That's effectively a double bottom. Doesn't mean we can't go on to make a triple bottom or a marginal new low. And again, so I still think, the bottom line, guys, I think the risk reward is attractive, meaning you're risking minimal downside if you have a stop somewhat below for the upside potential, because I think we could swing the 5-year all the way up here to that 123-ish. 123.071 level right there. That would be, at this point in time, my maximum target, and these are other targets right here. So that is the update on ZF. Now let's look at lumber. Speaking of the inflation trade, which continues to ripple throughout the markets here. I'm going to find lumber for you. Just one second. LB, here we go. There's my lumber chart, 6-month chart, 2-hour candles. Remember, we put in a divergent low right there. We had this rally, which throughout I was highlighting this uptrend line, recently broke. There was our sell signal, but we fell back to support. You can see on this is a simplified version. I have just one support level. It's about 618.40 right there, which we just slightly overshot, and we've recovered. But LB is right now testing this minor downtrend line. So that's the setup right there. Two things. You can either go long now with a stop below the recent lows, and now that this support has held, at least with a little whipsaw signal, or wait for a little more upside there, and then you'll have taken out the near-term downtrend line. You're probably asking, well, what would your targets be? Certainly right here, I see a resistance. That would be the first target, 733. And then the next target would be a run at those recent highs right there, somewhere around, yeah, let's just say right on there, about 867. No divergence, but we are pretty oversold right here. And remember, we're still above this previous low. This could be, only time will tell, the making of a new uptrend with higher lows and higher highs. We're going to need to see and take out these highs to put in a higher high now. But so far, not so far, if this low holds. And that's why, oops, didn't mean to do that, guys. And that's why I'm saying, take a shot at it. Is it a screaming, bullish setup? No, not at all. I'm just throwing out ideas. Take them, manage your stops, keep them relatively tight. And then your risk reward is very attractive. Minimal downside compared to the upside potential in that one. And the metals, definitely want to do an update there. Okay, I've been updating these frequently lately. We put in this most recent divergent high. And, that's been the swinging down between these divergent lows, divergent high. Here's your micro trends in gold, but gold did put in that divergent high at resistance as well, my 1809 price target. We had several taps of that level, 1, 2, 3. Gold was unable to get through there. The divergences started to play out. Breakdown back test, move down, but we are at 1716. Again, anything's possible, including a run down to and even below the bottom of this range. I have support down there about 1721, but I'm still favoring the fact probably this divergent high will result in a relatively minor correction based on the outlook for the dollar and the euro, and as well as gold itself, of course. And so if we can rally from here, I can just tell you this: it's objective to go long here on that on or around that 1766 support. You could keep a tight stop below today's lows and swing it back up at least to the top of that range, 1809, and that would also be another back test of the trend line right there. So there's a near-term target. Again, nice run there if you have a relatively tight stop under the recent lows, or just let it run and see if we can pop above there. Then the next target would be 1837, 1838-ish. And possibly a breakout. All right, that's gold. Let's look at silver. SI, silver futures, and of course you can trade the ETNs just as well. Silver also right back to support, so that's why I wanted to do an update. Not just gold, but silver as well. And remember, we broke the trend line after hitting this 24,867 price target the other day to the button, and we had negative divergence at the time when we hit it. And that divergence has played out. We fell back to this 24 support. Could have held and bounced, but it didn't. It broke support, so that's what put us in this near-term downtrend right there. We back tested the $24 level and got rejected, but look, hit that 23, and these are levels I haven't even touched these in a while. Hit it to the penny, I think. 23.055 or close enough, as close as it as you can see right there, right on that level. Here, why is it bars? Let's put on candles. Either way, the almost same difference. Bear with me here. Boom, there we go. There's our candlesticks. So it looks like maybe a slight pierce below it. I mean, almost immeasurable. And so far, holding off that level. So I still think it's objective to go long silver as well with a stop below the recent lows for a bounce back trade. Maybe we start to set up at a downtrend line right here. Again, it's active trading stuff. I definitely can't make a strong bullish case because we're still coming off relatively fresh off this divergent high, and then the sell signal, the trend line break. So first rejection off that resistance level, then a break of support. So take it for what it's worth. I think a bounce here is likely, and it could mean could be the end of the downtrend. Well, we'll see. Let's look at the euro real quick. Euro still has that low that we put in recently with this bullish falling wedge, double bottom, divergent low right there, breakout back test, and another test there. So 3 successful tests of the 115.45 level so far. That is a big level right there. Again, because you have 3 distinct reactions. The buyers have come in each and every time you've gotten there. So if you break it, it's not going to be bullish. Anything other than if you have a little whipsaw move through there, sometimes you get that fake out move. But as of now, it held, and I favor more upside to that next target there. Remember, we already hit my 116.18 target right here the other day, and when we did it, we had negative divergence. So that's divergence has played out. And I favor a move up here to 117.90, and if we get that, that should be quite bullish for gold and silver because they tend to move together with the euro. And that is it. Just loop back to crude. Crude's starting to crack down. That's why I wanted to loop back here. I'm finished with the video. I covered everything I said I would in the beginning, and just wanted to mention we're starting to crack that 80.75 level. Not solidly yet, and we still need a 60-minute close below there. But just wanted to mention that the buyers so far have failed to step in at that support level, and the move down through there should take us to those next targets. All right, we'll wrap it up here. Get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.